Yeah, welcome to our channel. I just want to, show you the philosophy behind the way we trade. In this channel, it is very, very, very simple, based on different sessions and bank zones. The first thing we normally do is we do top-down analysis. So on a given day, we just come to the day time frame and check, okay, the direction where the market is going. As you can see vividly here, the market is bearish on a daytime zone. So then we move to 4 hours time frame to really confirm that it is in the same direction with the day time frame. So as you can see, if you check here, you see this is the the recent swing high in the 4 hours time frame here, then here, 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 here. So you see basically the direction of the market is bearish. So what we are basically looking for is is as long as the market, the 4 hours co- correlate with the 1 hour time frame, correlate with the day time frame, then we'll be looking for trades in the direction that both of them agree on. Like here now, we can see that both of them agree on bearish. We'll be looking for sells. So, but if they are bullish, we'll be looking for buys. So, if we go down to 1 hour time frame, we look for our zones. First of all, we look at the week. Um, let me put on. Uh, mm, uh, uh, we look at our week. This is um, our week. Because if you look at this, our week, the how the market performed within the week, the past week. So we look at the high of the week and the low of the week. And that will give us a range. We'll probably will be looking up, and going to the next week. Then when we do that, then we look at what in this particular gold USD. Because if you look at, even without being told, the reds, you will see that the red color is where the movement is mostly, without being told, and the red color is US zones. So the red color is US zones because our candle are set up in a way that each zone, London zone is blue, um, Asian zone is black, and US zone is red. So these marked out our zone. So when once we just look at that, so I know that within the US zone, I'm looking for the range. Like here now, I look for this, the top, and this is the low of that particular day of that particular US session. This is the top of that US session, and this is the low of that US session. Then the market went as high as here, and then came as low as here, then closed here. So, and if you look at the Asian session, for the next Asian session after the US session, you see that the market opened here, went as high as this, then went as low as this and closed here. The London session opened here, went as low as this and went as high as here and closed. So basically, during the different zones, we are looking at the zone during the different sessions. The bank zone we will be looking at, depending on the pairs, currency pair we are trading on, we'll be looking at the different zone that correlates with that currency. Okay, but the gold, for this gold trade, we know basically that the US is where the movement occur most. So that is why we take the trades during the US zones mostly, so and that is why all these zones are marked out, based on the US zone. We look at this zone. If you look at this zone, this is the high of US on this day. This is the high of that, and here is the low of US on that day, the low. Then if you look at here, you see that there is always a reaction on these zones. Other sessions may react within these zones as well, but you know what we are looking at is mostly where US zone are reacting. You see, in this zone, there is a reaction here, there is a reaction here, there is a reaction here, there is a reaction here. Then if you go to the lower zone, you see this zone marked out and there is a reaction here. So basically, what we do is that as we are looking for sales on on a particular day, just like the market closed here, and this is the past week. When Monday opens, what we will be looking at, we'll be looking at if the market pushes up here. If the market pushes up here, have a reaction, then we take the trade down here, because here is a major support zone. Then if the market pushes up, I'm talking about the US zone, the US session. I'm not talking about Asian or London. What I'm saying is that when the market opens during Asia or London, a lot of things would have happened. So depending on where the market is at when US opens, that will determine the area or the zone where we take the trade. So if the market breaks beyond this zone, we expect it to come to this zone, but it could possibly react at this zone because this is a US high too, you know, or of this session. If you look at the low here and there was a high here, we'll look at we'll look at here this zone as well. So look at that zone as well, because the market, after going beyond this place, after going beyond this zone, could react at this zone as well and can react at this zone as well. So these are how we look at trades. So we take trades off zones, taking into consideration the bias of the market. If the bias is bearish, then we take sell trades, and if the bias is bullish, we take buy trades. So it's just as simple as this. We don't, make it to be too complicated. And with that, I welcome you to this channel. You can subscribe if you are a new person so that you get more insight into how we trade and the way, we look at Forex generally in order to make better income for ourselves. Thank you.